Welcome back to another Forex training video. Video number 3, Characteristics of Price Behavior, Part 3. From watching the last two videos, you'll know that price trends and price ranges. But how does price behave when it comes to an end of a trend or comes to the end of a range? If price is trending, that trend will come to an end. If price is ranging, the range will eventually come to an end. And in this video, the next video, we're going to look how price behaves when it comes to an end of a trend or the end of a range. In our previous videos, we looked at price behavior as it trends, a series of higher highs and higher lows if price is uptrending, and a series of lower lows and lower highs if price is downtrending. This is the key characteristic to trends. And when this key characteristic is threatened, when an uptrend can't make higher highs or higher lows, or a downtrend can't make lower lows or lower highs, that can be a signal that the trend is coming to an end, and we generally see recognizable patterns that price forms at these times. If you look at my demonstration, we have an uptrend, price is moving steadily on the upside. We have a series of pushes and pullbacks or rallies and retracements. We're making higher highs and higher lows. And then we get to this point here, where price pulls back, it goes for another push or rally and can't make a higher high. The selling power is starting to beat the buying power. Obviously the buyers had the upper hand as price uptrended, but the roles are starting to reverse. Buyers can't push price any higher. When price doesn't make a higher high, price then falls on the downside and creates a lower low. This low is lower than the previous low. That's the characteristic of a downtrend. As price pushes again on the upside, it soon reverses and we have the start of a downtrend. Lower lows and lower highs. Obviously this demonstration can be flipped. We can have a downtrend that reverses and becomes an uptrend. This pattern is created by price often in financial markets, and we call it a double top. This pattern of pushing, pulling back, pushing again and making a similar high, and then starting a downtrend. If price was downtrending and we had this pattern form on a downtrend, we would refer to that as a double bottom, and I'll give you some demonstrations on real life price charts. But this isn't the only pattern that price can form at the end of a trend. Let's look at another. This time we have a downtrend that becomes an uptrend. We have a series of lower lows and lower highs as price is downtrending. But when we go for this pullback or retracement, it's strong enough to make a similar high than the previous high. This can act as a signal that the selling power is starting to weaken and the buying force is now coming into the market. Price goes with another push on the downside, can't make it and goes on the upside. This pattern is referred to as a head and shoulders. The double top or double bottom is a series of two pushes that creates a double peak or double trough, whereas the head and shoulders pattern is three peaks or three troughs. The first and third being similar in size and the center being larger. This is actually an inverted head and shoulders pattern. If this demonstration was flipped and this head and shoulders appeared at the top of an uptrend and became a downtrend, we would refer to that as the head and shoulders. This is an upside down head and shoulders, so it is an inverted head and shoulders. If you're brand new to these patterns, this may be going over your head, but to help you understand these patterns, let's look at some real life price charts. In our previous video we used the Euro US dollar to demonstrate price trends and price ranges. Let's use a different currency pair. This is the pound against the dollar, or GBP USD, and this is a 4-hour chart. You can see to the left of the chart that price is clearly downtrending. We have a push to the downside, a pullback, a push to the downside, a pullback, and another push. And we have lower lows and lower highs. But look at this pattern that's formed at the bottom of this trend. It's a double bottom. Selling power pushes the market down, price retraces, price goes for the other push, the selling power isn't great enough, and then price goes on the upside and starts an uptrend. Our lows are very similar, and we have a clear double bottom. Let's see what happens at the end of this uptrend. Price uptrends, and then it comes to an end and downtrends. We have our series of pushes and pullbacks, or rallies and retracements. Price pushes, it pulls back, it goes for another push, it does make a higher high, but only ever so slightly. Price then pulls back. As price pulls back, we create a lower low, which is the characteristic of a downtrend, and price was uptrending, so this can act as a signal that this uptrend could be over. Price goes for another push and a downtrend starts. This is our head and shoulders pattern. We have the 3 peaks, the center being the largest and the 2 on the side being similar. The reason it's called a head and shoulders, obviously we have our head and our shoulders on either side. Let's see what happens at the end of this downtrend. Price downtrends nicely, and we have another double bottom. So just to remind you of these price patterns, we have a double top, that's the double peak, the double bottom, that's the double trough, the head and shoulders, which is the 3 peaks, the center being the largest, and an inverted head and shoulders, which is the upside down formation of the head and shoulders. Let's look at some recent price data of the pound against the dollar and see if price has created any of these patterns at the end of a trend. We're currently on a 4-hour chart, so let's use a lower time frame. Let's use the 5-minute chart. This is a 5-minute chart of the pound against the dollar. I've zoomed in to make these patterns easier to see. This is the price data of this morning's trading. It's currently 20 to 3 in the afternoon, and this is this morning's price action from 5:30 in the morning to about 9 o'clock in the morning. First of all, we have an uptrend, we have a push, a pullback, another push, price pulls back, we have a lower low, a signal that this uptrend could be over, Price goes for another push, fails, and goes on the downside. We have our head and shoulders. As price pushes on the downside, it pulls back, it goes for another push, and it fails. And then price starts a very strong uptrend, which has lasted for most of the day. We have our head and shoulders, and we have a double bottom. These patterns can be seen throughout the Forex markets, and recognizing these patterns can help us in so many ways. If we're trading with the trend and we're in a large amount of profit, and we can recognize one of these patterns or recognize a high or low has been broken, that is a clear signal to close our position and take our profits as the trend may be over. If we're looking to open a position in the financial markets and recognize one of these patterns, for example, if we recognize this double bottom in this morning's trading, we had a great opportunity to open a long position and follow price as it uptrended. The key characteristic of trends is a series of higher highs and higher lows for an uptrend, or lower lows and lower highs for a downtrend. When this characteristic no longer prevails, this can signal the end of a trend. Please make note that I use the word can, as everything in the financial markets, no matter what trading tool or trading principle or concept we use in our trading, it's not fail-proof. But these signals are very strong and are generally very reliable. The common patterns we viewed in this video that appear at the end of a trend are double tops, double bottoms, head and shoulders, and inverted head and shoulders. In our next video, I will show you how price behaves at the end of a range. As always, thank you so much for watching. Please like this video, please subscribe, and view more of our videos.